What up? We're waiting for the FOMC minutes at the moment. Has the Fed changed anything? Market selling off, had a big upside move early and actually started to sell off a little bit. So once we get those FOMC minutes, we're going to jump over, preview what the market is trying to price in. We did get PPI this morning. We'll talk about that. And this morning we got short rates actually moving up a little bit. Dollar down, long rates up. That was interesting. That was different than what we have actually been seeing. So, let's see. We should be getting those minutes in. Maybe it should be like 5 more minutes. But yeah, let's preview what we're seeing in the market until those minutes come out. All right. So for now, let's just go ahead and look at the live market. What we're seeing is, well, this is Tesla. I'm keeping an eye on Tesla. Needs to get back above 263. But anyways, we had SPY early. Gap up. We had a nice gap up on SPY. Okay, gap up early on SPY. And we pulled back into PDC, previous day close, bounced off that, got rejected by VWAP. So they really want to see those minutes. If anything's changed, I don't know what they're going to be. PPI did come out hotter than expected on all fronts. Okay, what is this? Market alert? Is this the FOMC minutes? Make sure we don't miss that. Yeah, so we had the S&P come down and just waiting to break out. We'll see if it can reverse here. It's pulling back pretty strong. We dropped yesterday's low, almost filled the gap. We might just fill the gap. We might just fill this gap at 432 and then get back up. I think 432 is the level we need to stay above. Big fake out this morning. If we draw back a little bit to the 4-hour chart, well, not 4-hour, but if we, yeah, see, we're above this resistance. So I think we just support here. We might even just pull back into 432. So we're going to keep our eye on that. But yeah, still waiting those minutes to come out. They should be coming out now. Let me make sure I'm not off schedule. Yeah, FOMC minutes. 2 more minutes, maybe about 2 more minutes. Let's double check if, yeah, they should be coming on. I'm going to switch over. By the time this comes on, they should be showing up. Anyways, how's everybody doing today? This morning? See if we can make this full screen. There we go. Yeah, we'll see if we get those in. See if there's anything different with the crisis. I know Israel's being attacked on the northern front now. So is Iran going to get involved? Are we going to attack Iran? If we do, then this thing could escalate a little further. More market volatility. On the upside, I want to keep these minutes on. On the upside, right now, the macro forces are easing at the moment. What do I mean by that? Well, 2-year yields moved up a little bit, but they're still tame. 10-year actually broke down. Okay, it did bounce, but the 10-year is making new lows, 30-year making new lows. TLT gapped up tremendously, a lot of bond inflows there. U.S. Treasury yield spiked, acquired SQQ shares. You will profit from the tech bubble crash. Okay, Remy, thank you for that. 10-year treasury yields did not spike, bro. I don't know what you're looking at. 10-year treasury yields, I mean, we can put it on the screen. They did not spike. They actually fell sharply and then they recovered, but they did not spike. I don't know what you're looking at, Remy. Okay, we should be getting those in about a minute. Watch, they don't even show up. They should be reporting them. It's usually Steve Leisman. Forex also. I'll look at the Forex on my chart. So we go over the dollar. We'll go over what's moving the dollar. Right now it's yields. Chris Bruce. Okay, here we go. Fed minutes. Here we go. Days of gains so far this week. We are now close to session lows off. All right, not yet. So yeah, for sure. We'll look at Forex. I'm not a Forex trader myself, but we do take a look at what moves the dollar, right? A lot of times you guys are watching everything move off the dollar. China is easing at the moment, so the dollar should strengthen against China. Now that yields are down, the dollar's not. Here we go.
Federal Reserve officials in the September meeting judged that one more increase at a future meeting was likely appropriate. A majority pointed to upside inflation risk. For the record, this was back in September. We don't know if this still holds now. Some at the time, however, judged that no further increase was warranted. So there's your split on the committee that we're kind of hearing in the rhetoric out there from Fed officials. All agreed it was critical for policy to be, quote, sufficiently restrictive. That's the term that Chair Powell has used to indicate when the Fed would be done. And all agree that once they got there, it should remain restrictive for some time. Several saw policy at or near the peak. Near means maybe one more hike. At means we're there already. Several all agreed that the committee was in a position to proceed carefully. We've heard that from several Fed officials since the meeting. Several say the balance sheet reduction can continue even when the Fed is cutting rates. Participants say risk from over or undershooting on rates was now more two-sided than it had been in the past. Various participants pointed to downside economic risks. They included credit tightening from the banks, overseas growth slowing down, lagged effects of monetary policy as well. Many noted that finances of some households were coming under pressure amid high inflation and declining savings. There was concern about the commercial real estate sector, concern about the availability of childcare, which is believed to have brought a lot of people into the workforce, the availability of childcare. Auto worker strike was also on their mind as a new source of uncertainty. Upside risk to inflation, downside risk to economic activity, potentially from the auto worker strike. Participants hope that new data would clarify the disinflation process in front of them. And one more thing here, the period of below, they still continue to repeat that they're going to need a period of below trend growth and labor market softening in order to bring supply and demand into balance. Guys?
All right, Steve, stick around as we continue to discuss this a little bit more. Reaction to the Fed meetings with Mark Zandi, chief economist at Moody's Analytics. Mark, you've heard what Steve summarized as the Fed's meeting minutes. How close is the Fed to its goal on inflation?
I think it's well on its way, Tyler. I think, in fact, the most recent.
All right, cool. So we'll go over those highlights right now. Let's check those highlights out on what the Fed is seeing, and then we'll take a look at the market. Yeah, let's watch the price action, S&P right here. While we get those minutes in, on the left-hand side, you got the Qs moving up here. You got, well, actually, this is usually SPY. IWM, see, what am I missing? Advanced decline. Advanced decline's picking up a little bit. Yeah, let's keep that advanced decline there. So S&P is moving back up to PDC. Still in a bear trend. We'll see if it breaks or what it can do. Anyways, let's move over to those minutes. Let's highlight. Dang, why does this thing keep doing this? Let's highlight the minutes for you guys. I just posted it on the Twitter, or I retweeted a couple of people on the Twitter. And this is what we got. So Fed minutes, the vast majority of participants continue to judge further path of economy as highly uncertain. So a lot of uncertainty, which kind of leans towards a Fed pause. I think this is more dovish, right? Fed minutes, most participants continue to see upside risks of inflation. There you go. There's your hawkish statement. Participants said inflation was unacceptably high. More evidence needed to be confident price pressures abating. Hawkish. Participants said that several participants noted that balance sheet runoff could continue for some time, even after rate cuts begin. Now, that is neutral. I like to keep that. I want to say that's a little more dovish. Why? Because they're saying they need to cut rates before they shave the balance sheet. Okay, so they want to keep removing supply from the removing the money supply from the economy, from capital markets. That's what they'll continue to do. This is the first time I think we've seen them actually say what they're going to, because QT, a lot of people think about QT, right? Quantitative tightening. There's two parts to QT. You got removal of money from the system, and you have the removal from the money from the system, and you also have, increasing rates. There's two parts to QT. Right now, we've been doing both. We've been removing money from the system off the Fed's balance sheet, QT, and then we've been tightening rates. But we in March we had the money actually money supply go back up and then it came back down. So anyways, what they're saying here is later down the road things are uncertain before when we start reversing QT going back into QE. As we reverse, we're more likely to cut rates first and keep the balance sheet runoff or keep removing cash from the system. So they're going to cut rates, which alleviates the system. And that makes sense. Why? Because the government needs rates to go lower, right? The government deficit is ridiculous, and it's not really so much about the total debt. It's more so what hurts the economy or hurts the the market is so much what are the interest payments, right? What are the monthly interest payments? So if the rates come down, that significantly reduces the monthly interest payments for the market, and they'll keep pulling that money out. And if something does break, boom, balance sheet goes back up. So we're seeing the S&P right now respond. Let's see, right back to VWAP. Now, I don't think we're going to get any real relief unless we get above VWAP. Let me pull this volume down. A lot of buyers there, though. Short little recovery. What we want to see is also what rates are doing. So we're going to look at rates, okay? If you have TOS or you don't have, a lot of you guys have TradingView, huh? TNX is usually TradingView. Rates are, let's see, what are rates doing? Nothing really. What is a dollar doing? Dollar came down a little bit. So I think that's a little more dovish commentary. Everybody's positioned for hawkishness. And then next we want to see what the market is actually pricing in here. So let's take a look at the CME futures and see if the market is pricing in a higher chance of a pause or a hike. I bet you the pause went up. Okay, there we go. Check this out. Chances of a pause went up. Dollar weakness. Yeah, Chris. Oh, you got TradingView. We'll jump over to TradingView. Chances of a pause just went up after that FOMC. Remember, there's a lot of algorithms that are pricing all this in. So that's dovish. And I think the biggest thing here is that they're starting to signal, hey, we'll cut rates when we have to, but we're going to keep removing money from the system. And that's actually not too bad because there's not an exuberant amount of money in the system for, right? They're going to be QT, QE at the same time. Now, some people argue we are in QT at the same time. Why? Because the reverse repo facility is pouring capital into the markets. So anyways, pretty highlight here. Hey, the market digested the FOMC minutes as dovish, right? More chance of a pause in November. I'd agree with that. I know people are saying, I don't know, but I agree with that, right? After the PPI data came out, it was hotter than expected, but that's what we're staring at the moment. So let's go ahead and jump to TradingView and look how the macro forces, which if you're a Forex trader, you're a swing trader, or you just want to, stay up to date with the market's doing, you got the dollar breaking the trend here. So the dollar's looking weak. It still has some room to fall. This is the daily chart, DXY. So it is breaking the trend, and you want to see more weakness. I think the confirmation is below 105.50. That's where that's kind of where the bottom range is, 105.50. So actually, let me pull this up here so we can get some more clarity. 105.50. Once we get below this range, I think the dollar is going to start cycling low. That's my thesis right now. I think we get a Santa Claus rally, so you get a weaker dollar. That could change. Hey, more geopolitical risk could, if things really escalate, you get the dollar moving higher. But right now that the risk is actually going into US Treasury. So for the guy who said that US Treasuries were spiking, bro, I don't know what you're smoking. US Treasuries are actually wait, did you say Treasury yields were? I think you said yields were spiking. Yeah, yields are not spiking. Yields, this is 30-year yields. They're actually falling. 10-year yields are falling, right? TLT bonds are moving up. This is good. This is very constructive for the market. I was expecting hey, I said last Friday, we thought, hey, the employment report would be the first leg of the bull market. First leg. And now once we get through inflation data, once we get through the FOMC minutes, we're going to see if that second leg starts. A second leg is going to be close the gap. S&P closes the gap at 438. Well, this is SPY. SPX, you're looking at 4,400. We're not there yet. You got to see us close the gap at 4,400, get above that gap. And this will finish this will be the first leg. The first leg is getting out of this. Okay, this is the first leg is getting the momentum back to the upside, close the gap, get back above. The second leg is we break to new 52-week highs. The third leg is we head for all-time highs. So 1, 2, 3, that's what we're looking at. And I think in the intermediate, let's mark this up. So we got leg 1, We got leg 2, and then leg 3 would be all-time high, somewhere around there. So that's what we're looking for, S&P 500. If we continue, I'm very bullish, right? I'm bullish. Year-end rally. We'll go over the reasons for that. So, Chris, does chances of a pause mean the dollar weakens? Yeah, 100%. Chris Bruce, if the Fed does pause, if they do communicate that pause, which the market is reading into it, the dollar should be weaker, right? Weaker versus, man, there's a lot of Forex traders. The dollar should be weaker versus the other currencies. Let's go ahead and look at the other currencies right now. This is what you guys are looking at if you're Forex trading. Dollar still strong against the yuan. Still, what is this? Dollar futures dropped for what, the past couple days. Those are dollar futures. Japanese yen, the dollar strengthening. Because here's the other part: the dollar will weaken. It should weaken for stocks, but when it comes to other currencies, if they're printing more, if they're more dovish, which right now Japan and China are easing. They're easing faster than the U.S. So I don't know if you really get the dollar, weaken against Japan and China. But I bet if we go to the other countries, the dollar is weaker. Yep, Brazil, it's been weaker, not in the near term. Again, who is this? Russian ruble. Hey, Russia's financial conditions are picking up. Who is this? The pound. So you have the dollar much weaker against the UK currency, against the British pound, right? And then you have the dollar weaker. Nope, not Canadian, Swiss franc. Okay, so yeah, the dollar should be weakening. But I would say look at dollar futures here. If you're a Forex trader, look at dollar futures. I don't really look at this. I just look at DXY. And this is much stronger than, dollar futures are much stronger than DXY. So I don't keep my eye here. This looks bullish for the dollar. And, the way the setup is, the dollar should move up going forward. But for stocks, anyways, we're looking for the breakdown of DXY, the dollar index. A lot of euros out there. That's what we're looking at. So FOMC wrap up is, they said the same thing as usual, pretty dovish. The market is anticipating. The market is basically, digesting this as a dovish report, and we've been saying that, right? Last Friday, you had the technicals really negative, and everybody's negative sentiment is negative. Everybody's short. They're covering the bond traders, the ones that are shorting the U.S. bond market. They're starting to cover, and the shorts on the market are starting to cover, and we're seeing that in the intraday price action. Global liquidity is picking up a little bit. Let me double check on that. Reverse repo facility still picking up, and global liquidity starting to pick up. Fed net liquidity still picking up. Liquidity conditions are bottoming. And I talked about this yesterday. I'm going to keep up with this narrative about going through liquidity. And here's what it is. Right, here's what you got to look at. If you're a Forex trader, I'm not sure exactly if you guys look at the macro, but for when it comes to the stock market, if you're trading QQQ, if you're trading NASDAQ 100, or if you're just trading stocks in general, then which you want to know: economic activity, technicals, the macro, right? Sentiment, positioning. And this is what we got. Economic activity starting to recover. Services, the market is made of services and manufacturing. Services are 70% of the economy. Services are still expanding, and I expect that to continue going into what? Going into Christmas, holiday spending, right? Employment, well, let's not go there. Manufacturing is starting to recover, marked by new orders. If you have my macro report, the newsletter, if you guys are keeping track of that, link in the description, link in the bio. I got to put this one on YouTube. I'll have it on here afterwards. Then you'll see that I have the new orders, I have production, they're all picking up. This means the economy is actually starting to lift. It's actually starting to recover. And I know there's that recession fear out there, but it's just going to get kicked down the road. We're not really seeing a whole lot of a global recession. There is a rolling recession, right? Employment is in not employment. Housing and real estate is in recession. So we know that for sure. Housing, real estate, recession. But employment is showing seasonal strength. We got the employment numbers on Friday. They were Goldilocks, right? Inflation falling, average hourly earnings falling, and employment is strengthening. So I think this continues into December, right? Into the holiday seasons. I'm a little more dovish when it comes to January, February, when consumers finally stop spending to show people that they have money to, give kids gifts. XYZ US consumers are very like to consume. So seasonal strength is what we're looking at. Inflation is tame. Okay, we just got the PPI report. I know it came out hotter than expected on every metric, but it's barely hotter than expected. We'll look at those trends also. And inflation also, core PCE, what the Fed is focused on, that came down. Liquidity is weak, but it is starting to turn up. The macro forces are peaking. That's a big positive for stocks. Dollar down, rates down, oil down, right? That's big. That's big. Natural gas is starting to come up a little bit. It is breaking out of a range. That could be trouble into the future. Anyways, volatility, local top volatility is rolling over. The S&P or equities in general, bullish diverge. We're seeing bullishness. We're above the 200-day moving average. We're trending higher. Very oversold. Should be a bounce here. We have been bouncing. I think we continue. Okay, there's a lot of bearish positioning, a lot of negative sentiment that sets us up for another rally. And monetary policy is tight, but I think we're at the end of the hiking cycle. The market is literally trying to sniff out the end of the rate hikes. If this is the end of the rate hikes, the market's going to boom. I think we go into that. We finished the leg one rally. If in November, I think it's November 1st, if the Fed actually does pause, they're going to try to stay a little more dovish because they know hawkish because they know the economy is strong. But I think they also know that seasonal spending is coming down. Also, there were some revisions showing that, and I got that on my Twitter, that the savings rate, there's still $1 trillion of excess savings. So I know we hear, oh, savings are deteriorating into Q4. It didn't happen, I think, because a lot of it is the dividend yield and there's still employment. People are still employed. Seasonal employment is booming right now, not career jobs, but part-time jobs for shopping. You go to the mall, they're hiring a lot of people. Amazon Prime, deliveries, right? The industrials have a lot. Now inflation's going down. Demand for oil is going down. Why? Because they are halting flights around the Middle East. So there's not going to be a whole lot of flights. That brings down the demand for oil, which is already kind of falling. The seasonal strength was the end of the summer. So I think this is a real, really great setup for the bull market. Fiscal policy is still accommodative, right? Inflation Reduction Act, CHIPS Act, infrastructure bill, still a lot of liquidity for stocks in general, still a lot of multifamily homes being built, even though housing is in recession. So this is a really good setup. And looking at those macro forces, again, that's all you got to keep your eye on, right? Is where are these forces? What are these forces looking at the moment? The dollar is starting to break. It's not over yet, but once we get below 105.50, we have more conviction that the dollar's coming down. You see bonds, there's a safe haven during the war, right? Israel being attacked, Hamas, XYZ, blah, blah, blah. All this geopolitical uncertainty is causing a flight to safety in US bonds. So the shorts, the bond vigilantes, Bill Ackman, they're starting to cover their positions, right? They're starting to cover their positions, which puts the bond market up. And that means yields come down. That means the dollar comes down. Well, also flights are getting delayed and canceled. So oil could go back up. I think this is still the wild card, right? But the Fed, when it comes to Fed hikes and the stock market, the Fed isn't looking at oil prices unless they spike to like 120. So you really need to get up here, right? You need a big spike, kind of like we saw earlier in the year. Are we going to get that? I mean, some people are hoping so, but demand is falling. This is not like Ukraine versus Russia. This is more so, Israel can protect themselves. Obviously, they're destroying the Hamas at the moment, and unfortunately, a lot of the Gazians or the Palestinians that are civilians. But this is not an escalated war. Now, if Iran gets involved, we're going to see the VIX spike. If Iran gets involved, Iran is a big oil producer, and part of the drama here is Joe Biden did release $6 billion to Iran for a hostage negotiation. You're going to hear all kinds of different, propaganda versus that. Let's just go with the facts here. He released it for some hostages, but at the same time, they're also easing sanctions, or they're turning a blind eye to Iran for oil, because Iran is banned for some trade in oil. But I think the Biden administration is using geopolitics to allow them to create more supply of oil so that the oil prices can come down, inflation comes down in the US. And as soon as they started doing that, look what happened. Oil dropped pretty hard. So forget the politics. Let's just look at the facts here. Oil demand is falling. Production is coming up. Production is rising. Supply is rising. Demand is falling, but you could argue the demand picks back up. Anyways, that is easing at the moment. Nat gas, keep an eye out here, right? It is breaking out of this trend. So nat gas you could trade it if you want. UNG, United States Gas is the ticker for some of you traders, but UNG in general, we don't really want this to spike because electricity costs would go up and the Fed might have to do something about that. But again, it's an energy cost. So the Fed takes out energy, takes out volatility. And friend, let's go, Brandon. Yeah, let's go, Brandon, for sure. We're all on that train. Either way, either way, we're hoping for unification between, because see, Saudi Arabia was doing a deal with the U with what was going on is Saudi Arabia is trying, the Saudis, they're a pretty sophisticated economy. They're growing fast, and Saudi Arabia is trying to get more defense. They're like 70% of the weapons from exports from the US, meaning they're importing a lot of US weapons. And basically the US is like, hey, if you guys continue to buy weapons from us, or we'll supply, the best weapons, if you guys normalize relations with Israel. And they're like, okay, great, we're going to do that. The Saudi prince was here in the US talking on Fox News. And then next thing you know, boom, not Iran attacks, Hamas attacks, but we know that's fueled by Iran. Iran's like, nope, because it goes against Iran. Look, if Saudi normalizes relations with Israel, then obviously that threatens Iran, because they're part of the Middle East, and Saudi kind of has that dominance there. The Middle East fight each other, so that's not in their best interest. All of a sudden, the attack happens. Now we're testing Israeli defense mechanisms, Israeli intelligence. So we don't know. Is it that Iran is showing a weakness, and so that Saudi doesn't actually build those negotiations, or is this actually a good way for Israeli defense weapons to show off and kind of get the Saudis to say, okay, yeah, they got a formidable technology. Let's go ahead and make that deal. So we don't know, but either way, how is it doing on markets? I think this is going to end quickly unless it escalates to Iran. In the north, the Hezbollah are starting to attack a little bit from Lebanon. So that's not good, but it's all about Iran. Where, do they have nukes? If they do have nukes, and I think this is what Saudi is worried about, we're going to see the VIX spike if they have nukes and they start talking nuclear war. And that's why the Saudis are trying to get these defenses from the US and from Israel, because they do not trust Iran, obviously. All right. So in that case, oil will probably spike. That is a black swan event if it is to come. In the short term, back to the Fed, back to the market, we see constructively that the S&P is picking up. Let's go back to that daily chart, our intraday chart really quick, and see how the S&P is starting to bode for getting back to VWAP. There we go. What is Tesla doing? Let's look at the old baby Tesla. Tesla, very bullish on Tesla. Look, everybody's very bearish on Tesla right now. They're lowering their price targets, XYZ. A lot of shorts coming into Tesla. I think we're going to see a short squeeze if margins are announced to be bottoming. If Cybertruck is the Cybertruck expectations pick up, and if the full self-driving licensing starts to pick up. We already know the NAC standard for the supercharger network is picking up. So this is going to be a nasty earnings report for Tesla, because there's so many people that are shorting Tesla at this range. They're going to get squeezed unless Tesla, because I know they're losing market share in China, but they cut prices so far that we should see them actually gain market share going forward. Nobody else can compete with them. The price of a Model 3, Model Y is now dropping to, price of an ICE vehicle. So I'm looking out for that. But anyways, looking at the overall market, let's look at NASDAQ. NASDAQ filled the gap here early in the morning session. And not early, the NASDAQ filled the session before the FOMC minutes. Let's see if there's anything new coming out for FOMC. We'll double check that. Back to VWAP. If we don't get above VWAP, we're going to go bearish until tomorrow, which I don't know if we get above VWAP. Why? Because the real inflation report comes out tomorrow. Headline core XYZ. The expectations are kind of weak, so I don't know. But the fact that we got a bounce here is constructive for the market, because it's telling us that the market is sniffing out the end of the hiking cycle. Is the inflation report really going to change any of that? I don't think so. The Fed already has that information. And then what are some of the Fed members actually telling us? Fed Bostic, Mary Daly are saying that, hey, the bond market tightening actually is like tightening rates for the market. And I think that's why the bonds are peaking out here. Bond yields are starting to peak out. Rates are starting to peak out. Dollars starting to roll over, because the Fed is telegraphing, hey, we are more likely to pause. That's what I think. Maybe I'm wrong, but I think that's what's going on here. So back to oh, now let's get rid of that. Leave page. So back to breaking news. Let's see if there's anything else came out here for the market. We got some more minutes. Here we go. Participants still saw below trend growth, softer labor market as necessary in restoring economic balance. Okay, that's positive. What is that telling us? That's more dovish, right? They're saying, hey, yes, we might be hot in the season of November, December, which it's seasonal spending, right? It is seasonal strength. Yes, but they do see the labor market slowing going into January, February would be my guess is what they're speaking of, below trend growth. Fed minutes. Many participants noted that data volatility potential data revisions as supporting case for proceeding carefully into a lot of revisions happening, a lot of data revisions happening also. Oh shoot, I didn't even see these TikTok. Hey, look, if you're on TikTok, go ahead and jump to the YouTube and post your comments if I missed them so they can stick because they get lost in the stupid feed. So jump on. I'd appreciate it if you guys jumped on there. Also subscribed, help me get to 1,000. Almost there. Either than that, I'll try to catch your comments. Typically piss on TikTok people who talk markets, but you're delivering facts. I like it. Thank you, wise old owl. Appreciate it. What's your opinion about OCCI? I don't know what OCCI is, bro. OCCI, is that a free PlayStation? What the heck are you guys talking about? OCCI, no clue what you're talking about. Saudi told US that it will consider raising production. Oh yeah, there you go. Wise old. Yeah, exactly. That was part of it too. Saudi would consider raising production. So the White House is trying to use geopolitics to ease financial conditions, ease inflation, and then, Iran steps in. Oh, dang, the market is spiking right now. Something might have been said. Anyways, wise old, 100%. It's all about oil, right? Everybody thinks it's all about this religion and blah, blah, blah. It is to some degree on the lower fronts, but on the high front, it's all about the money. It's all about the power, the geopolitics come down to oil and really, trading in dollars, economic powers. Saudi and Iran have normalized relations, but they remain at odds. Tesla's biggest issue is, oh, this guy got some knowledge, is competition from other EV makers. Yeah, possibly. We'll see how that plays out going forward. I don't really think they have I don't think Tesla's biggest issue is, can they execute? In my deal, if they continue to execute, they're going to eliminate a lot of the competition. They're very far behind on a fundamental basis. All right. So, anyways, back to the Fed. Thanks for the comments there, a wise old owl. Appreciate it. Like your feedback. Fed minutes. Many participants noted that data volatility. Oh, we already read that. Tightening. Careful and I think they're telegraphing the pause here, bro. Look at the market ripping. They're telegraphing the pause. Several market participants commented that with policy rates or near peak, decisions and communications should shift to how long rates stay restrictive versus how high they will raise. Look, they are literally communicating what Mary Daly said the other day, which is the long end of the curve, right? The long rates are doing the work for the Fed. And I think they're going to pause here and they're going to expect rates to stay high in the long term, or at least they've got up to a certain level that's accommodative towards restriction, right? Low rate 2-year yields, they're not going to rise because we know the Fed shadow liquidity coming from the reverse repo is sucking up those treasuries. So we know that's not really going to move up. But the long end is, and that is kind of getting the yield curve back in position to where it should be. Okay, here we got Fed staff economic forecast was stronger than July projected. Resilient consumer business spending. Yes, the consumer is still resilient, guys. I know you're hearing out there consumers are going to fall apart, and I think I retweeted this. Let me double check. I think I retweeted this. Should have retweeted it earlier. Yep, Ryan Dietrich. Nope. Yeah, here it is. Remember that all the talk. This is Ryan Dietrich from who is this Carson Group. Remember all the talk the past few months about excess savings running out? Turns out the data was off, and now there's an extra 1 trillion excess savings we didn't know about last week. Guess we missed all the update articles, right? Let's take a look at that. Maybe you don't trust this guy. We'll see. But this is it right here. These are the excess savings that we're looking at. I guess they were revised up. So here's the prior. Now they're revised up an extra trillion. A lot of data manipulation here, but at the end of the day, that's why we watch the macro forces. That's why we watch positioning, sentiment, technicals, the new data. If you're a trader, if you're an investor, right, you're just taking that information in. Also the VIX, what is he saying about the VIX here? I think he's saying that volatility is still below 20. So we're at a local top. I agree that we are at a local top when it comes to volatility. Let's double check vol on the macro forces here. Volatility, like right after that report, vol looks like it's peaking. So these are different levels I have, right? You got the 30 level where back in 2022 when inflation was elevated and the Fed was hiking rates at a rapid level, we were up there. Now we're back below 20. 20 is kind of the deciding factor. If you're above 20, there's a lot of volatility in the market. If you're below 20, the market is good. If you're below 15, I mean, you're back into a bull market trend. So we've been below 20, below 15, 20. since what, January of last year, since really March. The banking crisis ended everything, and now we're back in a bull trend, and that trend is holding up. If we look at SPX, right, we're still holding here. We're looking at these. We're still in the uptrend. Okay. Now, actually, let me tighten this trend. This is probably a little misguided. We did drop the trend for a second, and then we came right back up, right? So we got to get past 444. Do we do it right away? I don't know. It really depends, right? We don't know. It depends on the macro forces. If oil continues to ease or move sideways, if rates continue to ease or move sideways, if the dollar continues to ease or move sideways, then we can definitely stay a lot more bullish. If liquidity comes back in the market, we're going to stay bullish. Year-end rally. Let's go to SPY news, see if anything updated really quick on the SPY, because we spiked pretty quickly. Let's see. FOMC minutes hint that necessity for another hike, highlighting ongoing inflation concern. Look at see, this is a highlights. The FOMC is hinting at another hike, bro. That's not what we just read. These guys, like, this is why you can't believe headlines. You got to really take all the comments together. They're hinting at a pause. I could be wrong here. I'm pretty confident that they are not going to hike, though, because these yields are peaking. White House's Kirby says we're running out of runway on ability to support Israel and Ukraine using existing appropriations. The market might have liked that 11:18 a.m. Let me see. The market spiked after that. What does that communicate to the market? We are no longer going to send more stimulus. These guys take care of themselves. We're not going to keep printing money. The deficit comes down, less supply of U.S. treasuries. Well, not less supply, more investment into the U.S. economy, and oil's coming back down. So I think that might be the communication there. Anyways, the market did spike. I don't know if it's exactly on that. It could be the FOMC showing some stability also there. Also, we got Tucker. Rates have already moved up since last rate hike, so the market has no, I'm just kidding. I know what you're saying. Done the Fed's work. Yeah, exactly, Tucker, 100%. That's what I think. That's what they're trying to communicate. The market is now doing the Fed's work for it. When we get those revisions higher, actually, let's double check and see what. Let's take a look at what. I messed up on that one. Let's take a look at what the Fed is saying about GDP going forward. The GDP nowcast, if you're familiar, it's basically the Atlanta Fed. The Atlanta Fed GDP nowcast there. I think somebody was saying that it got above 12, not 12%, 5%. Sign in. I am signed in. Take a look at GDP here. All right, so this is the nowcast. Got up to 5.1% in July and August, but if we zoom into the last 6 months, we're above 5%. So right now they're forecasting Q3 2022 comes in at 5%. That is stronger than expected, which puts the hike on the table. Hey, thanks, Serb Zero. Appreciate the hike. Appreciate the sub. Shout out to you guys. If you're new, hey, here's a shout out to you guys that are new. I appreciate you guys jumping on. And yeah, I appreciate it. We are on a little early today because we did have the FOMC. So yeah, that's the breakdown so far. I mean, we're not done yet. Look, there's a lot to give me your comments, your objections. I want to hear your objections. Constructive. I always like constructive criticism. Give me your objectives. I'll run through why we're heading to a Santa Claus rally that we called on Friday. If you want to check the Twitter, or I'll just show you guys. I mean, I got to give some evidence. Got to do some marketing here. Got to get the marketing here. What am I doing? I'm already on there. This is what we said last Friday, right? Last Friday, I pinned it at the top. We said there's a good chance Friday triggers the first leg of the Santa Claus rally. We could see a mixture of peak rates, peak yields, peak dollar, peak crude, peak put to call ratio, and peak VIX. Non-farm payrolls, unemployment will be the triggers. Now, I was wrong about that. The trigger was actually average hourly earnings dropping. But unemployment ticked up. I mean, whatever. Either way, it was the setup was for the bottom to happen, right? S&P is very oversold. So I'm not saying I know how to call markets, but I'm trying to give you guys some ways that you can supplement your trading or your outlooks going forward. You need this is Wise Owl. You need a better news application. Try Newsware. Just facts, no sensationalized headlines. Okay, Newsware. I appreciate it. Shout out to you. I'll check that out actually right now. Newsware. Newsware. Appreciate it. Yeah, I mean, there's so many. Oh, okay. I see Newsware. Oh, you trying to bro? You trying to sell me over here? Is this the seller? No, I'm just kidding. Newsware. I'll check this out. How much is it a month? Is this Trade Talk? Newsware, a competitive edge. Yeah, I'm gonna keep that on there. I'll check that out. There's a lot of stuff that comes out. Again, it comes down to interpreting it also, Wise Owl. Do you really need every single detail of the news? For entertainment, yes, but when it comes to calling markets, you really just need the macro, and you need the macro, the technical. In my view, this is where I stand. You need to add together the fundamentals, the macro, and the macroeconomics, the fundamentals, and the technicals all at once. And most people don't do that. So that's what I do. Am I perfect? No, definitely not perfect, but definitely trying to figure out, how this thing is going to come together. Now, the other part to it is factoring in economic activity, the consumer, employment, housing, real estate, inflation, liquidity, the three macro forces: dollar yields, oil, VIX, volatility, bond volatility, where are rates at, what are the technicals, what are the fundamentals looking like, positioning, fiscal policy, position. I should have added on there. I'm going to add that on: positioning and sentiment. So putting those all together, where do we get, right? That's kind of what we're looking at here. Anyways, getting back to you, Zerb. Oh shoot, let me open this up, bro. I can't even see. Got it on a small screen. Do you have do you do any thoughts on crypto or just the market? If so, what are your thoughts on BTC? Thanks, bro. Yeah, of course we do crypto on here. The thing is, crypto is in the back. I think I'm very bullish on crypto at the moment because nobody's talking about it. Zerb Zero. I like that name too. Zerb Zero. I can actually pronounce it. A lot of people can't pronounce, a lot of people have these crazy names like Mr. Carbides. It's hard to say Carbides. I want to take his name back to Peter. So yeah, I'm very constructive on crypto. Let's go to BTT. Let's go to the BTC chart. I'm very constructive on crypto going forward because regulation will get passed, because JP Morgan just came out with tokenization today. I think tokenization is actually the next catalyst for crypto. It'll eliminate 90% of the cryptos because you don't need them anymore, because they're going to be private blockchains. I'm very bullish on CCIP Chainlink because they are creating the mechanism for central bank digital currencies to connect to each other, right? To connect to each other and actually trade. This is going to happen. There's no running from it. And also connect to public blockchains, which would be crypto in general. So I'm very bullish on crypto. When does it actually happen? I don't know. We're waiting for the ETF. That can be prolonged till March. That is the end date that they can keep prolonging it. XRP, when the judge just said, hey, I'm not bullish on XRP. I actually went on TikTok and I said, hey, XRP, most of the use cases eliminated. Some guys all Chainlink, it's only an Oracle network. That tells me most crypto guys have no clue what actually Chainlink is, what's actually going on with crypto right now, which is the tokenization of all real world assets. Every bank will have a chain, every bank will have a stable coin, and they're going to cross chain. They're going to tokenize everything and able to move it faster, cheaper, smarter, able to record the data. Oh my God, what about privacy? What about manipulation? Chainlink CCIP literally tells the truth between chains. So I'm very bullish on Chainlink. So right now, I think the two catalysts actually, there's three catalysts for crypto right now. There's three catalysts for crypto. Number one is liquidity. If the Fed balance sheet starts to move up, if global liquidity picks up, if Fed net liquidity picks up, crypto's going higher. It is the fastest horse in the race. Number two, the Bitcoin ETF. If that does come online anytime soon, or when it does, that is opening up a giant retirement system. And when the liquidity rises, when Bitcoin rises, what did they say? The wave lifts, the biggest wave lifts all boats. I can't remember. Anyways, everything's going up, and mostly everything's going to go up. And then also in the same token, you have tokenization, which is more the fundamental below everything. Tokenization is why they're buying Bitcoin. And I like that thesis because that plays all the way to 2023. The ETF is only going to play out, liquidity is only going to play out until the next cycle. So the ETF is cyclical, right? It is a fundamental cyclical catalyst. The liquidity is a fundamental cyclical catalyst, which is very bullish because we're at the beginning of the cyclical policy cycle. And then number three, tokenization. That's not cyclical, that is secular. So I'm very bullish on tokenization. I'm very bullish on Chainlink. I'm actually, I made a video about Chainlink, and we're getting long Chainlink a little more. I'm actually more bullish on Chainlink now than Bitcoin and Ethereum because of that fact, and we're going to do more videos on that. So I hope that answers your question, Zerb. Bruce, only thing was, oh yeah, hold on. Let me jump over here. Earnings season always kills. Let me see. Rates have already risen. You need a better news application. Hey, thanks for that newsware. I'm gonna check it out. Earnings season always kills bearish momentum. Yes, because I was looking at this yesterday from the who is it, the compound, and they're showing how the market recovered so fast. So let's jump over here. We'll come back to crypto. I'm just gonna try to hit these comments. So going into the last earnings season, let's just use let's just look at the S&P. Going into the last earnings season, you had the S&P really front run the earnings season. This was the breakout over 4,200 on a technical basis, right? So the S&P broke out, and it was because we had the debt ceiling. The S&P was short. The short position on S&P was at an all-time high. Well, the highest since 2007. That was a big setup for a short squeeze. And I was like, bro, we're going to have a short squeeze here. Forget what you think. So we ran up into earnings and we sold off when earnings were over. And that was simply because it was buy the news, sell the fact, right? That was the market. And, look at Tesla, prime example. Tesla exploded and then after earnings sold off because it was all priced in. This time around, we're coming from the highs and we're falling. So I'm actually bullish on earnings. I think earnings are going to lift the boat. Margins are falling, and I have a whole thesis on that. I talked about it the other day on my on my Twitter, and it was, let me get that thesis for you. We talked about it yesterday also. We have bank earnings coming on Friday, and that thesis was basically for, see if I can find it. Oh, premium stocks. So premium stocks in earnings season. Maybe they don't all go up, but here's premium stocks. I'm going to get to your full comment, Chris Bruce. I just want to expand the people that are new here. Who's going to benefit from this earnings season now that we're selling off? Share buybacks, more EPS, right? If you buy back shares, you reduce you're creating scarcity. Shares go up. Only a couple companies can do that. Premium stocks. Debt funding via money market funds. A lot of these companies have already locked in rates at 3%, low rates in 2019, 2020, 2021. And now they can put their cash in the money market funds and they can actually fund their own growth. Disruptive innovation, that's always a win. Secular adoption, I mean, EVs is secular adoption. Blockchains is secular adoption. Renewable energy, secular adoption. Chips, manufacturing, semiconductors, secular. There's all this secular adoption, and they're going to win too. It's a mixture of all these. Pricing power. Can you increase or lower your cost and still grow? Efficiencies, margin retention, pure revenue growth. You have pure revenue growth. There's demand for your product. You have brand. Also benefiting from fiscal policy, which is huge. Inflation Reduction Act, Chips Act, and the infrastructure bill. So that's my take on that for you, wise old. Wise old, not loving the banks to earn. I don't care about banks. JP Morgan, the big banks will be fine. The small banks are going to get crushed. I don't believe in technicals myself. Charts are very important for commodities, but not for stocks. Wise old, I'll disagree with you 100%. Yeah, I disagree with you. Commodities are cyclical anyway. Stocks are not. Maybe that's why you say that, because they're cyclical, but I disagree with you. The XRP Queen, what do you think of Quant? How are Chainlink and Quant different? I think we talked about it before. The XRP Queen, my brother actually, Isaiah, if you're on there, what is the quick difference between Quant and Chainlink? I'm not an expert on all that. I only focus on a couple of things, but I know they're not near Chainlink. There is a difference there. I'm not sure 100% what it is right now. I think we talked about this before. Cool dude, what does it take for FOMC minutes, bullish or bearish? So far bullish, but we still have inflation. The market responded very positive. Wise old Al, our cool dude 2020. Cool dude, the market responded positive also because the rate hikes, the probability of a rate hike went down after that report. So the Fed was kind of dovish there. Back to the YouTube comments. Jump over to YouTube too if you want your comment to stick so it doesn't get taken up. So only thing was, this is Chris Bruce. What up, Chris Bruce? Shout out. Only thing, thanks for being patient. Only thing was the chance of recession. A lot of people think it's a sure thing coming, and friends and family around me are all feeling the spending gets tighter because of inflation. 100%, they're feeling it. Here's the thing. Are you going to bet that people don't keep putting their money on credit cards and they're going to buy Cyber Monday, great deals? Here's the thing about Americans as a macro, the smart people don't do it. In macro, US Americans like to spend money. They buy stuff they can't afford. They push their spending forward, kind of like their daddy government, FOMC. That's what they do. They push what they owe forward. And that's just the culture in America. So they're going to keep spending, especially in this quarter when you're heading to Halloween parties, right? You have OnlyFans, you have Instagram. People are going to keep spending. There's going to be a bull market somewhere. And I'm not promoting any of that. I'm just saying, they're emotional spenders and they're going to, cosmetics are going to go higher. Just the culture right now. And plus, Thanksgiving, everybody wants to meet up with their families. They're going to spend for that. Also, you jump into Christmas gifts, they're going to keep spending. So I think spending continues here. But that's why I say once January comes, I think growth really falls off a cliff, because then it's like, okay, it's a new year, stop doing the wrong thing, save money, right? Inflation's too high, blah blah blah. So 100% constructive criticism. Yeah, always throw me some constructive criticism, 100%. I think that I say this: Santa Claus rally, and then we'll see how things shape up in January. But then again, I'm looking forward to the Fed and looking forward to, what did the Fed just say? We can cut rates and still shave the balance sheet. So they might go QE, shadow QE. They cut rates. So the government, government spending, government interest payments come down. So the economy doesn't get bankrupt, where the Fed doesn't, the US Treasury doesn't, and still shave off the balance sheet and call it QT. So that's really QE. They already have shadow QE. So at the end of the day, even if the consumer falls off a cliff, here comes social programs, right? Here comes, credit card debt repayment program. Here comes student loan repayment program. Here comes new stimulus checks for those who can't XYZ. So I still think in an election cycle, even if the consumer does fall off a cliff in January, February, March, here comes the Biden administration or whoever it is. We might cut taxes. There's going to be more, mark my words, right? If there's one way to get people to vote for you, it is to give more stimulus. And I think that's what's coming in some shape or another. Carbides. I bet your friends and family are still buying $300 AirPods and going to Disneyland. The consumer is irrational. Yeah, exactly. 100%. Right on it. I agree. Good call on Chainlink. Yep. Tiger Media. Interesting how BTC and ETH just took a bit of a dip and Link is stable. Bro, Chainlink, I'm telling you guys right now, this is a steal. And I don't want to get too crazy on Chainlink, but it's like, bro, they've been backed by Swift. They've been backed by the World Economic Forum. JP Morgan is tokenizing their assets. You know what that means? They're going to be using CCIP. CCIP at the end of the day is not only interoperator, but it is collecting fees, and those fees are going to spike when you have DTCC, which is the Depository Securities Settlement Service for the United States government, using Chainlink CCIP to settle transactions, and they're doing 2 to 4 quadrillion it's just this is a home run. Just like Tesla in 2019, I was like, damn, this is going higher. Chainlink is a small market cap. It's 4 billion. This is your chance. Look, and I talked to an XRPer the other day. Actually, this morning, he didn't even know what CCIP was. I was testing him. I was like, hey, what do you think about CCIP eliminating all the use cases for XRP? He's like, what is CCIP? And then I said Chainlink. He goes, oh, Chainlink is only an Oracle. This is why the opportunity exists. They think Chainlink is only an Oracle network. And it's like, they don't understand. It is a computational service, not only for crypto. Crypto can die. BTC can fall apart. Ethereum can fall apart. And Chainlink still survives. Chainlink still is valuable. Why? Because it is not a blockchain. It is not, it is not only conducive for crypto. It is more conducive for central banks, digital currencies, financial systems, tokenization of all assets, proof of reserves. Like it's a home run. Rising tide lifts all ships. There you go. Lifts all ships, lifts all boats. So when the liquidity cycle comes, a rising tide, liquidity picks up, lifts all boats. When Bitcoin goes higher, it's going to lift all boats. Who is the fastest horse when it comes to the assets? That's not bonds, that's not gold, it's not real estate, it's not even stocks. They can't even beat the Fed's balance sheet. It's not S&P, it's not Berkshire Hathaway. It is NASDAQ, Amazon, Apple, Google, Facebook, Tesla. And I think Tesla outruns all of them because they have a fiscal secular adoption behind it. And crypto beats also Tesla. Crypto beats, well, not all the time. Tesla's crazy, but crypto does beat Tesla. If you go to the altcoins, well, Chainlink is the only one I think can actually has real value behind it. And I think that Chainlink outpaces Ethereum and Bitcoin. And hey, it has a lot, it's a small market cap there. So yes, a rising tide lifts all boats. And that's what we're looking forward to. Let's see, what else did we miss here? What the F is BTC dropping, getting ready for a bluff, I guess, about to pump. Like BTC, like as long as it's above 25K, it's not going anywhere. It's just going to go up and down. What else we got here? FOMC is supposed to be at 2 p.m. Eastern. They just, well, it's just FOMC minutes from the last meeting. So this was actually from the August meeting. They basically changed their language up to show you if they basically switch up their language to show if there's any disparities or any changes in what they've been saying. And so far, not really. What is it? 11? Okay. So far, not really. They haven't really changed much. I think they're gonna pause here. That's what we're seeing here. SERB 0. Okay, back over here. What else do we got here? So yeah, Cole did. I already said FOMC. Watch for more merge action in oil. Oil firms have cash and need added revenue sources. I like you, wise old owl. I like your comments. You seem like you have a really good outlook on the market. Keep throwing out your comments there. Show me something I don't know or haven't looked into. And yeah, we want to get good. Look at, we want, if you're watching the stream, we want there to be good commentary. This is not about what I know everything. I don't know everything, but definitely want to be challenged and challenge your thinking too. And let the viewers decide what they think. So watch for more merge action in oil. I don't even know what you mean by that. Oil firms have cash and need added revenue sources. Okay, so what does that implicate? What are you implicating there? Chainlink is more decentralized than Quant. Okay. And Chainlink itself isn't so decentralized. It is a decentralized protocol like TCP/IP, right? The whole internet is foundationed on TCP/IP. It is the protocol to run the internet, but it collects zero value. Where in the world of tokenization of assets, of stable coins, really of blockchain, the language to transact between is going to be CCIP. And that is decentralized, right? The network itself is a decentralized Oracle network. It's not even close. JP Morgan never seems to pop on EPS announcement. Stock is priced for a 5% move. Yeah, I don't even care about who the hell wants to buy JP Morgan when you can buy Tesla? Right, on a downtrend. Nobody cares about banks at this point, unless billionaires who are actually, rotating, who are actually getting the what do you call it? Not billionaires, but there's a strategy for everybody. But most people are not buying JP Morgan. Most people are looking for, younger people anyways, are looking for more innovative, something they can make money on. JP Morgan can't beat the Fed's balance sheet. JP Morgan doesn't outpace inflation as an asset, but JP Morgan itself is investing in blockchain. As a matter of fact, didn't I post that here? Look, I'll pull up this article. Don't switch. I pulled up this article. I'm going to pull this article up that came in with JP Morgan. Here it is. And what it is JP Morgan. Let's get back to it. What we're seeing here is that JP Morgan, biggest bank in the world, is actually, so the biggest bank in the world, JP Morgan, right, is actually tokenizing their assets on the platform, right? And BlackRock is one of their customers or one of their clients. And BlackRock, we already know, are doing it. We made videos about this. So, dude, it's coming. It's coming, right? The tokenized collateral network, they're calling it the TCN, enables the conversion of traditional assets into digital assets and makes a way for faster and more secure on-chain settlement. So it's coming, bro. It's coming. Tokenization is the real fundamental driver for crypto. Most cryptos won't benefit, though. That's the thing. I have to go now. All right, bro. Check you later. Nice to see. Nice to hear from you. Please come back. Jump on the YouTube. Subscribe. Link in the bio. I'd appreciate it. I want to see your YouTube comments on YouTube. Much easier, so it doesn't get lost in the stupid feed when we get on a roll here. But yeah, thanks, Wild. Have a good night. Have a good day. Hope you enjoyed. Cool, dude. In my opinion, Fed soft things at the beginning of 2024. Fed soft things, since it is election year and they don't want to tilt. I mean, yeah, that could fit in also. Year-end rally. How about those PPI numbers? I know, Josh. What up, Josh? Shout out to Josh. Came in hotter than expected, but I think it came in hotter than expected to some degree. Let's look at these PPI numbers, by the way. And I'm going to throw up your comment here, Tigger. CCIP is very new tech for Chainlink since July this year, so people don't know about it. Yeah, a lot of people don't know about it. That's what makes the opportunity, when people don't know, and that gives you the opportunity. Not when everybody knows about it. You're buying Bitcoin at 60,000 because everybody knows about it. You want to buy it at 4,000 when everybody hates it, thinks it's trash, and that's your opportunity. So, Yeah, let's look at those PPI numbers. Let's pull this up here. Make sure I am let's go widen this out. Okay. So, and we have real core tomorrow. So PPI month over month came in higher than expected, but the positive is it was lower than the previous month. So I took that as a positive. And the bond market did, right? At the end of the day, how's the bond market going to react? Core PPI month over month came in hotter than the previous month and hotter than expected. That was a negative as producer prices lead inflation. Those are input costs, but the bond market didn't really react. The market reacted negative initially. I think no, and it reacted positive and then it sold off. Let's see, PPI year over year, core year over year, it's barely lifting. It's up 2/10. So I think the market is really looking forward to the recession in Q1 or all of 2024 that may never come. I think that's what it's looking forward to. So that's my view. PPI year over year came in 2/10 higher. I mean, barely, even though it was set to go lower. That was negative, but the market didn't care. So the market's going to care more about the inflation numbers tomorrow, which is going to be tricky because there's this feeling that CCIP is the ticker. No, the ticker is Link, Bruce. CCIP is CCIP is the feature. It's one of the features. There's other features, but the token is Link, and the name of it's not a blockchain, but the name of the crypto or digital asset is Chainlink. I'm gonna put it in there for you. CCIP feature, Link, Chainlink, and there's other features too. So yeah, so PPI, that was interesting. That shows you that the market, in my view, what this tells me is that the market is really optimistic going in the fourth quarter, and also about the Fed pausing and those rates coming down are just stronger than the PPI numbers. That's what I got out of it. What about Tesla resistance level? Where Tesla is wedging at the moment. So Tesla resistance level, Tesla is wedging at the moment. Let's see. Let's look at this chart. SPY lifting. Look at that. Tesla's probably lifting. I know it sold off and early. Let's see if it gets back above VWAP. It broke the downtrend. Are you talking about intraday, or like if you're talking about intraday, the resistance right now is 263. That's the big level. It's shown some support the past couple days. 263, I'd say, is your support. I mean, is your resistance in the intermediate. If you're speaking of Tesla resistance level, user 123456789 I don't know what you guys got to give me a time frame. I mean, there's 1 minute, 10 minute, 5 minute, 30 minute, 1 day, 1 week, 1 month, right? If you go to the 1 day resistance, the real resistance here is you got 275, and then I think there's 275, and then you have 300. Those are your big long-term resistance, but we are starting to the market is, or not the market, but Tesla's in this gigantic wedge, very bullish wedge pattern, and it is holding the intermediate. I know this thing is marked up like crazy, but it is holding the trend. Okay, we're still holding the trend. I know people thought it would break. Carbides probably himself thought it was going to break down. I just think fundamentally and catalyst wise and position wise, the market, the biggest, the biggest, the easiest path for the market is to go higher because people are off position and they're going to go into earnings and see the premium stocks, the big stocks are going to move up. Tesla, baby, banks are going to get slammed next year. They're headed down. I see another bank bailout, 100%. And see, Josh, I think if something does break in commercial real estate or regionals, Fed steps in. And they might even cut rates. Today, they said in the FOMC minutes, we're more likely to cut rates and keep the balance sheet shaved off, or keep draining money out of the system and cut rates first. So, and CME futures, as a matter of fact, I wonder if CME futures actually priced in cuts. They were pricing in cuts. They weren't pricing in cuts till July of next year. So I want to see if those came down. They're pricing in a cut in July. Let's see, June. Did June go up? They're pricing in a cut in June now. So that was a big change. The market is now pricing in a rate cut in June of 2024, where before it got pushed out to July. And they're, pricing in a hold here in May. So that was positive. This could all change tomorrow. So we're obviously day to day, but hey, just take in the information, make your own decisions. What about Tesla resistance level? What about Tesla, bro? I just said bro, why are you spamming the chat? Yo, user 1 2 3 4 5 6 7 8 9 10. Jump over to the YouTube stream so you don't. I know maybe you don't want to lose your comment. Jump over to the. I'm gonna answer you. Jump over to the YouTube stream. Link in the bio, and ask your comment, and then you could jump back to TikTok so it doesn't get lost. That'll be better, and get you a name so I can identify you, bro. Um. Anyways, next week, Chinese stocks going up. Are wait what? Why did you say next week? What are you talking about? Faisal Dilla, bro. I don't know. Next week, you guys got to give the whole comment, something that's clear, concise, so I can understand what you're saying, or else I can't respond. Are Chinese stocks going up? Oh, Tesla for next week. Well, Tesla has earnings next week, so um, right now we can't do market predictions the next week. There's just two ways. There's two ways this goes. The two ways it goes is Tesla breaks out. Actually, let me make this bigger so we can see it on YouTube. There we go. There's two ways this goes for Tesla. Okay, we're in the big wedge pattern, and we either break out. Okay, we either break out to the upside above 270 right now. We retest 280, 275, 280, and then we go retest 380. I'm sorry, 300. That would be after earnings. That would have to be very bullish. As a matter of fact, if earnings are really good, and I don't even think it matters how earnings are, everybody knows that what Tesla did is they allocated their resources to increasing the features on their new factories to produce Cybertrucks. They had to enhance the factory, right? The mega factory. And so, or the gigafactory. So they produced less. They produced less models, and there were less deliveries, and the stock sold off. Initially, after earnings, the last earnings report, it sold off. It bounced, and it's wedging. And the wedge tells you there's an argument, or there's a battle between the buyers and sellers. That's what the wedge is telling us. And the wedge is the most powerful pattern in the market. But I think after earnings, what analysts want to see, first of all, there's a bunch of, Tesla bulls who are just going to buy anyway, but a lot of analysts want to see if margins have bottomed. They haven't been bottoming. So if margins have, and plus they're going to go down because they've been cutting prices. So the real slippage here is, are they cutting prices too much where margins suck? Or are they getting, and demand doesn't materially pick up? If demand isn't set or forecasted to pick up from these cuts, Tesla will break down, right? Probably, maybe I'm wrong. There's other catalysts, but if they see, okay, margins, this is as low as margins are going to go because the cost of the battery, the cost to produce the car is falling at the same time, and demand is going up, that's going to be very bullish. So it all depends how they interpret that data for Tesla. And then also, you also have Cybertruck. That could be super bullish for the market. So there's too many catalysts for Tesla to predict over the next week. Right now, it is wedging. That's all I can tell you. If it breaks above the wedge, we're going higher. If it breaks below 230, 234, actually 241, if it gets below 241 and holds, I'm bearish. Or 250, I'm bearish. Like, I don't know. There's too many ways to look at Tesla's wild, bro. Tesla's wild. I can't tell you exactly what's going to happen. I will say this: if the overall market rips higher into earnings and starts making new highs, Tesla's going higher. It's very sensitive to the market. It is one of the Magnificent Seven companies who are not being heavily allocated. It is the least allocated by institutions, and they are now piling in, thanks to that new JP Morgan report that came out like a month ago. So that's kind of what's happening with Tesla. There's no predictions on Tesla. It's more so learn about it, understand it. That's my view anyway. All right, so carbides, what up, carbide? I'm bullish on SPY today. I figured that we could go down to 430 on bad news, or 432 before a bounce. So I placed a call option on SPY and drove to pick up some lunch for my wife. Oh, smiling. I wish those emojis showed up. I don't know why they're not. But yeah, nice. So you basically did something very risky. But S&P is at the moment responding good. I think we still, let's see, what is it looking like? We might sell off. Here's the positive about S&P. We gapped up, it filled the gap, and it got below the gap, and then it bounced back up. So a lot of buyers here. Obviously, you see the price action. We were very negative, and then boom, we bounced, big reversal. What is the telltale? Well, you started getting some bullish divergence. Here's bullish divergence for you. Price is falling, okay? but the RSI, or the buying pressure, is starting to pick up here. And at some point, there's going to be a blow off top. I'm just kidding. It's a blow off bottom. And we got that reversal. And it was off the FOMC catalyst, which showed more dovish commentary. And what was the biggest dovish commentary, if we're going to talk about this? Well, first of all, the market started to price in what? A bigger chance of a pause. So the market did like that. Yields came down, rates come down. I think that's more important than anything else, that yields come down. Long yields continue to come down. All right, and then so any more FOMC news here coming in? Oh, and then so let's see, what did we miss here? Several participants commented that policy rate is at or near peak. I mean, bullish. Fed minutes. Fed staff economist forecast was stronger than projected on a resilient consumer. Oh, we already went over that earlier. Federal Reserve minutes. Let's see. Oh, here's the full minutes. I'm going to chat GBT this and then send it out in the newsletter. So subscribe to the newsletter. It's free if you haven't already. Link in the description. Actually, I got to put this one in the YouTube link if you're on YouTube, but it's definitely already in the TikTok. Bro, what is the indicator name that you have trend line on the chart? Are you talking about, cool dude? Are you talking about my YouTube? I'm not sure, bro. What is the trend, or what is the indicator name that you have trend line on chart? I didn't understand your question 100%. I really didn't understand your question. Are you talking about my trading view charts or the TOS charts? I have the TOS charts up right now. The trading view chart is different. So what I have right now on the intraday is VWAP, and I have the 9 EMA and the 21 EMA. So that's what I have on there. And if you're, yeah, that's all. I guess that's all I can respond to you. Could try to be a little more clear here. Cool dude. You're a cool dude now. Come on. Or jump on the comments jump the comments over here on YouTube. Yeah, now we're above VWAP though. We're above VWAP. Things are looking good. I'm just trying to see what's going on with the geopolitics here for the market. And then we'll see what CNBC is saying about this. All right. One second. Let me take a bathroom break. I'll be right back. And put your comments on there. Auto trend lines. All right, let's get back into it. Let's go. Let's go. Yeah. So, what were we looking at here? What were we talking about? I mean, the indicator you have for auto trend line on the chart. Thanks. Auto trend lines. So you must be talking about my trading view. You must be talking about trading view. I don't think I use auto trend lines. I mean, bro, you're on the TikTok. Shouldn't you jump on the YouTube? Because I don't even know what you're looking at. How you can't see anything, right? Auto trend lines. I use, look, if you're on, like, the thing is, if you're on YouTube, I can show you trend. I'm literally just drawing a trend line here. It's just trend line. I don't use auto. I don't think there's an auto on here. I'm just using regular trend lines. So trying to help you out here. I just don't know exactly what you're asking. I don't use any auto trend lines, bro. I saw on Tesla. But are you talking about on the trading view or on the TOS? Again, those are two different charts. I'm on trading view right now, and I'm on trading view right now. Let me see where I'll go to Tesla. Or are you talking about the TOS, Thinkorswim? What the heck is this? I don't use this. I bet you're talking about TOS because I was only showing yeah, it's probably TOS. All right, so TOS. I mean, do you have TOS? If you don't have TOS, does it really matter? Thinkorswim. Let me switch over to Thinkorswim on here. Uh oh, Tesla got rejected by VWAP. It needs to hold. I mean, I don't want to say it needs to hold, but I really want to see it hold VWAP. It just couldn't get above VWAP. How do you enroll in TOS? It is Thinkorswim. Here's the thing: it's owned by Schwab now. I'm not even sure if the charts are gonna stay up there, so it does take some work to get used to it. Maybe I'll do a whole video on how to do TOS, how I use it. But it's Thinkorswim Ameritrade, TD Ameritrade Thinkorswim, but I think the name changed. So I don't know. Yeah, Think or Swim. You got to download it to your desktop and all that. Um, Trading View is a lot easier to use, but I don't use auto trend lines, bro. Okay, cool. I don't have any auto trend lines. There's just different features on here. I'm just drawing the wedge at the moment. Chris Bruce, good commentary. First time checking you out. You have a lot of data to back your perspective. I will check you again tomorrow. All right, yeah, appreciate it. Thanks, Chris Bruce, for joining in. Shout out to you guys that are new. I'm glad I can bring some type of value to the stream. So yeah, that's what we got going on here. Let's hold on. Let me see, because here's the big problem, bro, with the market right now is what's going to happen with is the war going to expand? So you could look at the VIX. You can definitely watch the VIX, or are yields going up? And the other part too, if the war does expand, yields might actually come down, right? If yields come down, then I mean, stocks still go higher. And I think there was, let me go to my profile. I think there was some. Oh, here it is. So check this out. Basically, it is telling us that usually when there's a war, Vietnam War, Gulf War, Afghanistan War, that one is different. Iraqi War, Crimea crisis, the market went higher on the invasion. So, I mean, some people don't like this type of don't like this stuff and say it's stupid, but just to put it in your pocket there. Typically, markets will go higher during an invasion. And that didn't happen during the Russian-Ukraine invasion because inflation was spiking. That really spiked inflation. So we got Tesla weakening into the close here. The heck is this? Oh. Oh, okay. Yeah, we got Tesla weakening to the close here. S&P. Oh, there's also a Israeli Netanyahu forms wartime cabinet as military readies Gaza ground offense. Citigroup lowers. That's who. Citigroup lowers price target on Tesla. Maintains neutral weight to 271. Damn it, Citigroup. Come on. We'll see. $263 new lows. All right, let's do this. SPY. What is your guys' biggest fears in the market right now? Biggest concerns? Are you guys short, long? Now, interesting. SPY did find support off the pre-market highs from the previous day. So somebody, I think I was talking to some traders and they're saying I don't use pre-market, and I'm like, well, you don't have to, but pre-market always becomes a support or resistance. Tesla's staying right inside the wedge. Yeah, it's still in the wedge, exactly. Still wedging. I just want to see more strength versus the overall market. But you got those damn downgrades and from stupid banks. They're probably trying to get the price down so they can buy more. Especially with the auto strike destroying margins for these other companies. And then the Qs, they just closed the gap. I think Qs, I've been saying the Qs are probably going to lead the market. They just closed the gap and then reversed right off yesterday's lows. Well, not really lows, but support. See what IWM small caps are doing. Small caps still holding yesterday, a lot more weak. Dow value, and small caps are basically interest rate sensitive. Dow stocks, same thing. They almost filled the gap from yesterday. I think we're consolidating here. You take a little broader look at the market. It looks like we're just kind of consolidating. Let's switch over to the macro, the macro charts. I like to use TradingView as a macro chart. It's a lot easier to navigate, but it doesn't give me as much detail as my Thinkorswim. So what I wanted to look at here was a run through triple B spreads. Okay, this is credit risk. It's still on the rise. Put to call ratio peaked. Junk bonds kind of coming down. See what's important here. Commodities still coming down. What is oil looking like in the intermediate? Oil, this is real constructive. Oil pulling back, filling the gap to the downside. Maybe we'll get a local top. Maybe we'll get a top on oil. How many stocks are moving above the 50-day moving average? Kind of peaked out this morning. NASDAQ at the top of the range. I could see a reversal here going into the inflation print. So we could get some downside. I think Carbides was calling that out. Some more downside going forward. And a retest. Bank earnings on Friday, though. So if we do come back to retest, this is NASDAQ, index, NASDAQ, the full index. It did fill the gap here and gap and go. But if we do pull back, we're probably looking at 14.9, somewhere around 14.9. S&P futures have not. Dang, I haven't looked at this for a minute. Let me fix this up. S&P futures still have a ways to go. Ooh, Ethereum is just hanging on. Tesla in that nice wedge. Yeah, here's what I wanted to look at actually. I wanted to take a look at the different sectors. You have banks, XLF, struggling today. KRE, is it falling apart? KRE still slowly. Energy down. Oil and gas up. Renewable energy down today. Semiconductors still falling flag, bullish flag. Ooh, communication services are bullish. And I think this is going to be from Meta and Google. If I got this right. Meta and Google. Yeah, communication services are up strong. Industrials are also pretty strong. Very nice bounce on industrials. Healthcare. Looks like trash. Biotech trying to recover. Consumer discretionary trying to recover. Who is this? Consumer staples. Retail, blah. Utilities. Oh, utilities are recovering. What the heck? They were getting smashed earlier. Now they're starting to recover a little bit. Builders, weak. Real estate starting to recover here. And I'm guessing home builders are recovering. So they're dip buyers stepping in to these new lows. You got some dip buyers in here. And I think the market's going to start to price in or digest the fact that We're going to get a fourth quarter spending from seasonality. Seasonality is causing this fourth quarter rally, in my view. Jumping over to Chainlink really quick for you crypto guys. To get the full confirmation, you want to see Chainlink break Chainlink versus Bitcoin. Make sure this is a log chart. Chainlink breakout versus Bitcoin. First of all, you want to see Chainlink versus Bitcoin go higher. It's almost there. It's trying to break out. Link versus ETH already broke out. So Chainlink versus ETH is very bullish, gaining momentum against ETH. And then obviously Chainlink itself is still in this big consolidation. Still has room to get out. Not till we get above like 9 to 10. 10 is the confirmation for sure. Ways to go. It can shoot up quickly. And let's look at the Mag 7. Magnificent 7. ARK Invest. Looks like trash. Apple. Still wedging. Apple's still a nice setup. It's coming into a lot of supply here. Supply zone for Apple. Amazon looks good. I like Amazon. Right off 125. Amazon moving up. Probably fills that gap. Google monster. YouTube is now the most YouTube has the most, I think, daily views for videos, passing Netflix and I don't know who else. So YouTube is only getting stronger. I mean, we're on YouTube right now, right? Meta. Oh, Meta's breaking out. I mean, that was we've been calling this out for a while. We're like, hey, this thing is wedging hard. And here it goes. Meta for the breakout. Microsoft looks like Apple. Netflix looks like trash. Shoot, this might crush Netflix. I've never been very like Netflix streaming lately has been trash. Nothing good on Netflix, in my opinion. So, also if X is coming on bringing videos, if Twitter X and then now YouTube, maybe buyers are just losing, and then they have to compete with Amazon Prime. There's a lot of competitors in that space. Nvidia just crushing it still. Look at that. Nvidia crushing it from September lows up 13%. And the big dog here, AMD, thank goodness it slowed down. AMD with the monster setup here. AMD with the monster setup. Let's see. This AMD is a tricky thing to trade. Swing trade. Let's check these charts. Let's see. Okay, so daily RSI starting to pick up a little bit. Or the weekly RSI picking up. That's a strong fat flag pattern. Once you get like 3 weeks, 1, 2, 3 closes, it's pretty bullish from there. So if there was a time to get long AMD, it would be today. Probably be today. But you better look pretty far out. It is supporting, let's take this off. It is supporting that previous resistance level. So what is this? About 107-ish. You have some support at 107. 2 wicks off that 107 level, 107 and a quarter. Right? 107 and a quarter for AMD. I think this is the best setup. Fundamentally, is it the best? I don't know, because I'm not a chips expert. But just from understanding the price action of AMD, when it goes, it goes. You could compare it to this. The tricky thing is last time it had this descending flag pattern. It broke out and then it made new lows. I don't think it does that this time, make new lows, but it could break out and then retrace right back to the breakout. So I want to see it pull back into the trend. I think I'd be more willing to pull the trigger around here, back into like 105-ish, while the overall market is picking up, obviously. SMH, you want to see SMH picking up. That is a semiconductor ETF. XOM, you guys looking at energy over there? Zscaler, breaking out. Zoom, dang, Zoom looks like trash. Thank God I got out. Freaking pissed me off, bro. I was so bullish on Zoom. I have to wait. I just didn't like it. I gave it time. I had to get out. TSM starting to break out. Okay. Until China invades. No, I'm just kidding. TSM starting to break out. Watch China invades and TSM goes higher. Goes much higher. SoFi, Roku, Palantir looks good. Team. I know XOM. I'm going to get to XOM. Twilio, dang, Twilio made new lows. Open Door dropping again. This is really because look at this. This really show. Oh, this thing is launching. ENPH finally. I mean, this thing's oversold. I think the price action when I look at tech in general, what I'm seeing here, dang, Adobe. Oh yeah, Adobe has a good catalyst. It was Airbnb that I was like, I think what's happening here is efficiencies. We talked about this earlier, and I'm gonna end with this. We're at an hour. We're at 90 minutes now. So if you have comments or questions, throw them in now. Throw them in now. Inflation. We'll see. You know what the inflation numbers come out tomorrow. I'll do something on the. I'm gonna throw something. I didn't really do PPI because PPI wasn't that important. It really wasn't. It just gives you insight into what's gonna happen tomorrow, and it looks like the numbers will come in hotter than expected tomorrow. Shopify looks weird. CRM and Shopify are some of those tech stocks. But what I was getting to is it's premium stocks. The market is pricing for premium stocks at this point. XOM analysis. Okay. XOM. XOM analysis. Exxon Mobil. Well, let's see. You have man, this thing is ugly. It's not like bearishly ugly, but it's just not a trendy. It's not trendy. I'd say you have support at 100. Let me box this up. You're looking at somewhere between 100 and 120. That looks like the range it's in. So it's in a range for sure. Let's throw on the simple moving averages to see where we're at. It is dropping below the moving averages. This could be further confirmation or signal that the oil trade is over. There's probably going to be support at 100. It'll pick back up. It'll pick back up at some point. I really don't know. I hope it doesn't. Not for your sake, but just for the sake to keep inflation tame. But ExxonMobil has a lot of investment in other places, so I think they'll be fine. But it is in a range between 100 and 120. And it did fall pretty sharply. The RSI is oversold. I would get long XOM once the RSI, if you're on YouTube, gets to about 30. It looks like it's headed for 30, which would also match 100. So XOM, I'd be looking somewhere between very oversold conditions and yeah, I'd look at very oversold conditions. It doesn't look good to me. This is very bearish divergence. Price is falling. Or I'm sorry, the buying pattern is falling while the price is holding up. To me, XOM looks bearish. I wouldn't be interested. But if you're going to get a bounce, it's probably going to be at 100 when the RSI is oversold on the daily chart. That's what I would say. For the most part, I don't know if it continues higher. I know people are bullish on oil. I think it's a false narrative. I don't think oil is really that strong in my view. But I've been wrong before. I didn't think it would get above 83.50. It blew off top and then it came back down. Why? Because more supply is coming into the market. The U.S. is at an all-time high supply. The SPR just got refilled. Hopefully that's not false information. I just heard that. I read it. Maybe it's false. So the SPR is getting refilled. Iran is still pumping oil. You know, they're still doing shadow QE. They're doing shadow oil, shadow supply. What else do we say? Revisions are the new QE. No, I'm just kidding. Also, with oil, you have Nigeria. There's 5 other countries increasing their supply. So I don't see oil remaining that strong. I could be wrong. If there's a black swan event, then oil goes up. This was a trade though. It came out, it blew off top pretty quickly and it's making new lows at the moment. So what did you say? Tigger Media expecting stocks to go down a bit tomorrow for CPI. I don't know, bro. Here we're at a point right now, and we'll go ahead and just click out of this. Let me drink my second caffeine. I'm gonna go to the gym. So don't worry, I'm not just drinking caffeine for the fun of it. I love caffeine. Actually, I wish I had coffee right now. I don't really want to drink this. But gotta do it anyway. What do I gotta do today? Yeah, I gotta do it. So yeah, let's get into this really quick. Let's break this down. Let's break this down for you guys. And again, you can refer to my tweets. I'm gonna retweet and try to get it organized so you can see kind of my outlook on the market, and I'll do this right after this call. But what I'm basically looking at here is I gotta retweet this stuff. I got to reorganize it. Okay. So what I'm looking at here is this. What most people are thinking right now is no, I don't want to say that. Sorry, that was stupid. That was build up for nothing, huh? Where's my notes at? I want to do this the right way. By the way, if you don't want to hear this, go ahead and come off. There it is. This is the one I wanted to look at. So right now, economic activity is recovering. Everybody believes we're heading into a recession. It's going to fall apart, blah, blah, blah. That is the big narrative here. Deep recession, deep recession. You also hear soft landing, but everybody hates the soft landing. Everybody's like, there's no soft landing coming. That's bullcrap. The Fed has never done a soft landing. Well, guess what? The Fed's never done F and shadow QE either. The Fed's never used QE in the way that they have. And, you know, rates are so high, the Fed can cut rates at any moment to save the economy. Okay. Plus, manufacturing has been in a recession. So we've already seen the recession. NASDAQ priced it in 2022. NASDAQ was down 38%. Okay. So we're in a rolling recession for number one. Economic activity, productivity is starting to pick up here. Production, right? What is this? Production of labor. Why can I never say this? It is the amount of goods and services produced per unit of labor is going up, meaning people are producing more. Is it really people, or is it AI, or is it, you know, better efficiencies? I think that's what we're seeing here. So I think we're slipping into an expansion where everybody believes we're in a recession. Okay. I could be wrong. As things change, we'll see if that actually factors in. When you have the macro forces easing at the same time, that also is a tailwind. Okay. Consumer spending. Oh, it's going to collapse. They suck. Debt is too high. Debt's always too high. If debt really knocked the stock market lower, and this is in regards to the stock market, if consumer debt was so bad, the market would never be up, because look at a chart of consumer debt. It only goes higher. It's really when they can't pay their interest payments, when they can't service their debts, is when the market's at problem. Well, market has a problem, but you're not going to get that unless they lose jobs. How are they going to lose jobs? They're not. Unemployment is not spiking yet. Also, you need a black swan event. The war could play a role in this, which is why we're going to keep up with the war, with the updates. I don't see anything new. This might be a quick and fast, swift war because Israel can protect themselves. Anyways, back to employment, back to spending and debt. Debt can be serviced, so we're good, right? Employment, seasonal strength. So we're going into UPS hires, malls hire. What is it? Amazon Prime. There's a lot of hiring seasonal, which is why I think we get the seasonal rally, Santa Claus rally, because people are going to keep spending. People have jobs. And when they have jobs, they don't save, they spend more. Housing and real estate's already in a recession, so don't worry about inflation going up. Rents are actually falling because there's more multifamily homes are being built in America right now. A booming of multifamily homes away from the interest rate sensitive areas of housing. So that's a tailwind for the market. So you're having construction spending, which is a part of GDP, which is a part of employment, also going up. So I don't think employment falls off a cliff. Inflation is tame at the moment. Okay. Oh, PPI was harder than expected. It's still tame, right? It's not exploding higher. Oil is the big catalyst. Core is falling. Rents are due to keep, shelter prices are lagging by 12 months. Those will continue to fall, which is a drag on inflation. So really everybody's expecting CPI to really be high, and it probably will be higher than expected tomorrow. But there's always the chance that because shelter inflation is lagging and now coming down, there's a chance that it's not that high. So I'm more optimistic there, right? Liquidity is weak, but it is picking up. We see reverse repo liquidity is still picking up. That is the money market fund. That is where money markets are. You know how you get money markets paying people? Everybody's like, oh, I'm getting 5% on money market funds. Well, guess why? Because they can park that money at the Fed's reverse repo facility. And when you park it there, you get paid interest. You get paid 5.5% interest. You get paid what the Fed funds rate is. So therefore, people are still getting interest income, right? Flow of liquidity through interest income. Now you got to have at least $10 million to really get, to live off that. So it's not exorbitant, but hey, the rich people are very rich, and the institutions are very rich, and they're collecting that liquidity. So I think liquidity is whatever. If rates come down, if 10-year yields come down or stay where they're at, that also improves liquidity conditions, or it doesn't strain liquidity conditions as much. Watch for bond volatility. That is risk premium, meaning premia is how much you charge per lending. If bond market volatility, and the ticker for that is MOVE. It's the MOVE index, MOVE. If that goes up, that is constraining liquidity. So you have liquidity going up and coming down. It's kind of like this. It's kind of break even. right? And then you move to what? Fiscal liquidity. Fiscal liquidity is pumping. Inflation Reduction Act, CHIPS Act, infrastructure bill. That is fiscal liquidity supporting more jobs, more employment, and supporting individual stocks that are going to be premium stocks, which benefit from this. Semiconductor chips, blah, 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 right? It's a lot of liquidity. Monetary policy is tight, but fiscal policy, so the government is very elusive or very accommodative. Right now, going to the technicals, we're still bullish. We're still looking at bullish technicals here, right? There's no denying that until the trend breaks, which it did break last week, but it was very oversold. And we said there's probably going to be a bounce here because people are more greedy at this moment, right? And fund managers have to be long something. They're going to look stupid going into the year end. And they didn't own Amazon, Apple, Nvidia, Tesla, Google, all these companies that exploded. They didn't even end. The clients are going to fire them. What? You don't own AI? You don't own EVs? Are you stupid? The world governments are switching to that. What's going on here? Because they think they're smart and they underperform the S&P. So they're going to start buying. That's why I'm still bullish on earnings. They're going to start buying big tech, Magnificent Seven. They have no choice, or they get fired. And you know, that's also, I'm not saying that's a fact. That's just where I stand. And then, so positioning is very bearish, very negative, but the economy is not falling apart yet. The Fed's probably pausing, more bullishness. Fund managers are going to have to, start to buy back. Very bullish. Fundamentals, S&P earnings, right? Earnings season, earnings in general. We'll see how that's actually the next big catalyst here. It starts on Friday, I believe. Actually, it's already kind of started, but the big banks start on Friday. So we should get positive EPS. We should get positive earnings. We should get positive revenue. We should get positive growth. And if that's the case, then stocks are going to outperform. Not all of them. It's going to be a stock picker's market, as we've said for a long time. And yeah, I think that's the wrap up here. I think that's where I'm at. This is what I'm looking at. We'll stay up to date. The war and oil are the real black swans here. Or those are unpredictable, so we don't know what oil is going to do. Again, oil back to 100 isn't that crazy, but if oil spike, it's the speed at which it moves. It's the speed at which the dollar consolidates. That's fine. It's the speed at which oil moves and the speed at which dollar moves. Oil is the biggest commodity on earth. It is the input to an energy. If you want to think about oil, why do I talk about oil all the time? Because oil is the cost of energy. If the cost of energy trickles higher, who cares? If the cost of energy spikes, it's going to cause, a lot of displacement. Now, even if oil climbs higher at a slow rate, what do we get? Monetary tightening. Tightens the belts on consumers. They don't travel as much, demand comes down. They always say the answer to higher oil prices is higher oil prices because it at some point stifles demand, right? It's like, oh, okay, I love to buy rotisserie chicken and rotisserie chicken prices are too high. And then eventually people are like, what, $15? Nah, I'll switch to, frozen chicken. So the answer to higher oil is higher oil. I think that puts us in a good constructive view for the next 3 months for this quarter. I'm not saying January, February, something could go wrong there or the war goes, crazy here. If Iran gets dragged into it, I don't know. We'll see how that plays out. The U.S. is sending boats across in a certain area to see how that plays out. So we got to keep our eye on this war. But anyways, that's my outlook. I'm bullish. Santa Claus rally, I'm calling it. Appreciate you guys jumping on here. Stay blessed, right? Make sure you get your workouts in today if you haven't already. Make sure you eat healthy. Give your gut, feed your gut. Be positive on your gut. That helps your serotonin, your dopamine levels, helps you to stay motivated. Let's see, eat healthy, keep a good mindset. Pray for those who are suffering right now in the Middle East and all over the world, actually. Don't forget to pray for them. Take a moment of silence. It'll help you out psychologically. Don't forget to help somebody out in need today. Work on yourself. Try to improve no matter where you are. Don't give up. Definitely get in the gym. Stay blessed no matter what. And hey, we'll catch you guys tomorrow. Appreciate you guys. Stay blessed.